Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale, of course, is going to end at the end of the month, so make sure you guys check it out. Let's go ahead and jump in. So, Bitcoin is still in this sort of holding pattern here where it's moved down below the bull market support band, and we talked about the reason the why Bitcoin would actually get this move was likely going to be due to a seasonal correction in the S&P 500 in the August to September timeframe, right? It's like if you were to look at year-to-date ROI of the S&P 500 in 2023, and you just simply go and compare it to all prior pre-election years, at least that we have up on here. This is normally when we get, a seasonal correction in the S&P 500, and it is usually when Bitcoin falls below its bull market support band. In fact, you can see that it did it here in August of 2023. It also did it in September of 2019. It also did it in August of 2015, and it also fell below it in August of 2011. So we've seen every prior pre-halving year for Bitcoin, it falls below the bull market support band. Now in 2011, it remained in a downtrend until November. In 2019, it remained in a downtrend until March of 2020. If we did not have the pandemic, then perhaps it would have lasted until the end of the year. In 2015, it lasted until basically it was just over right away because we had a capitulation down and it was a double bottom, right? So we got a double bottom. That was where the secondary scare terminated over here. Secondary scare over here did not terminate until the early part of the halving year. And then now we're simply trying to figure out where is the secondary scare going to in fact terminate. But again, our analysis of a seasonal correction in the S&P, which is what it normally gets, corresponding to a drop by Bitcoin below its bull market support band, and it's not just taking the average of all prior pre-halving or pre-election years. Just take a look at so this is 2023. Look at 2019, right? We also had a correction in this time frame for the S&P 500, and it still went on to put in new highs in Q4. It was also putting in new highs over here too, and even the S&P could go up in Q4. It all depends on when does the recession risk actually materialize. At this point, initial claims and continued claims are still relatively low. So, that hasn't really yet come to pass, and so this is still within the realm of prior seasonal corrections by the S&P 500. If we start to see the the labor market show signs of weakness, then perhaps this move over here doesn't actually come. So it all depends on the weakness that we start to potentially see in the labor market. You can also see in 2015 we had a fairly large seasonal correction around this time, and in 2011 we had a large correction in the S&P 500 around this time. So in all prior cases, the drop by Bitcoin below its bull market support band has corresponded to a seasonal correction by the S&P 500 in its pre-election year. And that leads to Bitcoin going below its bull market support band and kicking off the secondary scare in August/September of the pre-halving year. Now, normally what happens after Bitcoin goes below the bull market support band, unless you get a massive windfall event, right? So like in 2015, we had a massive windfall where Bitcoin double bottomed, right? So if you get something like that, then then things could play out sooner, right? If you get something like this where you just go all the way down to a double bottom, and then you go up. But last cycle, it was actually a much more painful bleed, right? Where we went down, we went back up to the bull market support band, we even wicked above it, but we faded and then put in a new local low, right? We took out this prior low over here, the June low, and we took out whatever low this was, and we came all the way down here, and put in a new local low, and then we put in another low in the early part of the halving year. So, I'm still of the opinion that the most likely outcome in the short term is a rejection off the bull market support band, taking us down to another local low. That is what I would guess is the most likely outcome. I could be wrong, right? Like, you should understand, I could be wrong. I get plenty of things wrong. I don't want to pretend otherwise. The receipts are there, the history's there. You can go find plenty of things I've been wrong about. I could be wrong. Maybe it doesn't get rejected. I just think the most likely outcome is a rejection. You might say, well, what about 2015? 2015 we just went below it and then went straight back up. That's true, but in 2015 we also had a pretty sizable drop. I mean, it was a 50% drop down to a double bottom, right? And this double bottom also was coming off about a 100% rally, about a 90% rally, and then we drop back down to a double bottom. Here we've had about a 100% rally, but this drop so far isn't really that much in the grand scheme, right? Like it's only from these highs, it's only been about a 20% drop or so. I suspect that Bitcoin will go down further before the year is over. We've talked about year-to-date ROI of Bitcoin in pre-halving years as well. We've seen that in the second half of the year, if we wreck the bears in the first half, we tend to wreck the bulls in the second half. And yeah, I mean, like, you know, right now, if you're curious where the bull market support band is, it currently ranges from around 27,222 to 27,886. So it's more or less around 27.2 to 27.9 is where the bull market support band is. And in fact, we've already wicked above the 21-week EMA already. Like we've already, you know, had enough. We've already seen the bulls take us above the 21-week EMA. But as I said before, in order for this to mean anything, you'd probably need to see multiple weekly closes above the bull market support band, which I think is somewhat of an unlikely outcome in the short term. It doesn't mean that it can't happen. It doesn't mean that it can't happen like this year, but I just think right now it's unlikely to really get that without, you know, first getting another leg to the downside. So my guess, my best guess, is that we fall short of new highs or new yearly highs, and we just get rejected and we come back down into this area. That's what I would guess is the most likely outcome based on all the data that I am looking at, right? That is what I would think is the most likely outcome. That Bitcoin then comes back down into these levels, maybe 23K, somewhere around those levels. And if you look at it on a monthly time frame, you can see why 23K could be an interesting level. Is that's sort of where this monthly resistance level was, and we sort of built out some support. So I kind of still think that we are heading back in that direction, and that we will likely fade back down to this level. My initial guess was that it would happen this month. I still think it could happen this month. We still have the last week of September to go. In fact, in September of 2019, for the first 21 days, Bitcoin was up about 4 or 5% or so. It wasn't until the last week of September where Bitcoin really dropped. And it dropped below the 20-week SMA, which right now we're already below, but it could correspond to a rejection off of the 20-week SMA. So I would be looking for some type of move like that. If it doesn't happen this month, I still think it will be happening before the end of the year, and sort of come back down to these $23,000 level and see if see what happens there. And I think that happens regardless of whether a recession risk materializes instantaneously or not. The recession risk has more so the risk of taking you below those levels, in my opinion, right? So like, a recession risk would more so deal with taking you below this level. I don't think a recession just gets you to 23K. I mean, that's just sort of usual business for Bitcoin in pre-halving years can get you to 23K. The recession risk is what happens potentially after that. Because again, in 2019, you can see that after we kind of came down here and put in these lows, after going up to the bull market support band and getting rejected, Bitcoin came back down, put in these lows. But then when the recession actually materialized, we went all the way down here, right? We went much lower. So I think that, it's true that in the short term, Bitcoin could go to 23K. I don't think that you have to have a recession for Bitcoin to go to 23K. I think Bitcoin goes to 23K just because that's what Bitcoin does in pre-halving years is you wreck both sides. But going below that into these levels, that I think is where a potential recession could materialize. Like that's where a recession could actually cause something like that to happen. And that's why I've said, I don't know if we put in a higher low. I don't know if we put in a lower low. I don't know if it's a double bottom. We've got context for a lot of different things. We got a double bottom in 2015 that a lot of people choose to ignore because it's convenient to ignore it. Sorry about this. I don't know really what's going on here. So we have this double bottom here that I think is relevant to pay attention to. We have a higher low right here that's relevant to pay attention to. Could be either of those. Could be a lower low. Who knows? Maybe we go down to the 2019 high to that 13 to 14K level. I don't know. But what I do know is that historically, Bitcoin gets a secondary scare. And normally, as we've pointed out, if you look at the logarithmic regression rainbow, the secondary scare terminates at a band lower than where the initial one went, right? So, and we've talked about this a few times, but like, you know, sort of this bear market ended right here on this regression band. If I can pull this up. So it sort of ended right there, and then the secondary scare terminated at the next regression band down. This bear market ended right there. The secondary scare sort of terminated at another regression band down with a slight wick below it. This bear market ended there. We had a secondary scare that took us all the way down to the lower regression band. It was still a higher low. This time, this bear market ended here. If we go down another regression band, that puts you, you know, at around 13 to 14K at this time. That would be if it went down today. But again, this is a monotonically increasing function. By the end of the year, this is likely going to correspond more so to like a double bottom type thing. So it all depends on when it happens. And I don't know when it's going to happen. I really don't know. I look at the stock market and it seems like it's getting the seasonal correction. At some point, it's likely going to start pricing in a recession, or at least people get scared about a recession, and then the Fed does something. I just don't think that has happened yet, and therefore we have to still be open to the idea that Bitcoin, the secondary scare for Bitcoin, is not yet over. I don't think it's going to be over until after there's some type of resolution to the yield curve. You know, as long as we don't have a resolution to the yield curve, that's sort of just going to be looming over our head. So I think the secondary scare terminates sometime, you know, between now and then, right? And until then, we just have to, you know, take it one day at a time. But in the grand scheme of things, you know, this is not that different from what we've historically seen in terms of price action in the second half of pre-halving years. Likely to see a rejection. If we do get above it, just recognize that that's not that uncommon to get above it. It doesn't mean anything until you actually get multiple weekly closes above it and you get like follow through, right? So like back over here in 2022, we got above it, but there was really no follow through to it. When we got above it here, there was follow through, right? So if you do get above it, if the bulls get back above it, if they push the price of Bitcoin back above, you'd still want to see them hold it and push higher over the next couple of weeks for it to really mean anything. In 2019, you know, we had a wick above it and we didn't hold it, right? Even in 2020, we got above it and the recession took us below it again. So all this stuff still has to come to pass. The resolution of the yield curve, the seasonal correction by the S&P could be coming to an end in the next week or so. That doesn't mean that it can't go lower. I mean, it certainly could, especially if a recession risk materializes, but we still haven't really seen the labor market move, so I don't know exactly when it's going to get priced in. But yeah, I just wanted to sort of come on here, speculate about where Bitcoin is, talk about that, you know, this is more or less what we talked about, a rally after the death cross, or into the death cross, which is pretty much what we got, right? What happened? Death cross, rally up. So far, we're getting rejected by the 50-day SMA. If we do get above the 50-day, note that the 200-day is all the way up at around 27,831. Some other areas of interest might be the 200-week, which is at 27,870. So if Bitcoin does move up another $1,000 or so, just recognize that that's getting back up to that 200-week SMA, which is actually where we held some sort of support over here, and maybe some resistance at this wick, some resistance at this level, and so on and so forth. So that would be potentially a difficult area to get through in a sustained way for a little bit, especially given where we are in the cycle and the typical weakness that Bitcoin sort of shows in the second half of its pre-halving year. My guess, if I were to sort of blindly speculate as to how this thing might play out, my guess is that we see some type of lower high. It could already be in, right? We see some type of lower high. We go down to around 23K plus or minus, $1,000 or so. Maybe from there you get another move back up, but you still have to deal with the resolution of the yield curve. And when we when we deal with the recession risk finally getting priced in, I don't know if it's a lower high. I don't know if it's a higher low. I don't know if it's a double bottom or a lower low. You should be prepared for all three outcomes. And after all that happens and QE starts to return, that's when altcoins start to show a bit more strength with respect to Bitcoin. Not before. That's when they start to show strength after all that stuff happens. It's just hard to be patient, right? It's hard for a lot of people to be patient to wait for all that stuff to come to pass. And so they end up losing a lot of money in the altcoin market, just feeling like they're going to get left behind. But until QE returns, until the Fed pivots or somewhere around there, I just don't see it. I don't see the altcoin market as making that move in any sustained way. So that's where we are, guys, today. Hopefully you guys enjoy the content. Make sure you guys give the video a thumbs up. Oh, by the way, the other thing I wanted to mention is that this back test of the bull market support band has been corresponding to the S&P bouncing off its own bull market support band, right? So like, and we talked about that before. We said over here that this bounce by Bitcoin off of its bull market support band would likely lead total 3, the altcoin market, to back test its bull market support band. And it did, right? So Bitcoin bounced, then total 3 back tested. And then we said that Bitcoin might backtest its own bull market support band if the S&P bounces off of its. And it did, right? The S&P bounced off its bull market support band, and Bitcoin backtested its bull market support band. So as you go further down the risk curve, or further up the risk curve, you can see how each sort of sector gets weaker a little bit sooner, right? So the altcoin market showed weakness first, then Bitcoin showed weakness by going below the bull market support band and backtesting it. Now the S&P got this bounce off the bull market support band, and then Bitcoin backtested its 20-week SMA. The issue now, though, is that this is actually below the 20-week SMA. So if the S&P can't hold this, it could pull recession risk forward if the S&P starts to go down very, very quickly. If, on the other hand, the S&P kind of holds this and slowly moves back up, that doesn't mean that Bitcoin's going to move up with it. Bitcoin can still get rejected and go put in a new local low. Remember, money moves from higher risk to lower risk, and altcoins are super high risk. Bitcoin comes, Ethereum's after altcoins, then Bitcoin. Then, I mean, I know a lot of people are here saying like, well, Bitcoin's better than stocks, but as far as risk is concerned, as far as volatility during uncertain times, Bitcoin does not have. It has a lot of volatility. And so I would argue that Bitcoin is, in that sense, is riskier than the stock market. I mean, the stock market doesn't typically drop 80% like Bitcoin does every few years, right? So there's more inherent risk in terms to the downside in Bitcoin than there is in the stock market, at least what we've historically seen. So, you could see Bitcoin put in a lower high and then go down and put in a lower low. And that doesn't necessarily mean that the S&P has to plummet either. Right? People might just be rotating capital out of, in the same way they rotate from altcoins to Bitcoin, maybe some of them just rotate from Bitcoin to stocks, right? And so you can kind of see as you go further down, people go further down the risk curve, they want to take on less and less and less risk. But by the time QE returns, all that, a lot of people want to take on that risk again. And that's when the altcoins start to do well, and then Bitcoin does really well, and then the stock market, but it all kind of comes in that cycle. So that's what we're looking at, guys. This is where we are. Bitcoin backtesting it off the bounce by the S&P into its, into Bitcoin's death cross. Remember, when Bitcoin gets this death cross, what it normally means is you get a short-term rally followed by a continuation of the trend, right? So you see a short-term rally, but the overall trend is likely going to remain intact. Just like with the golden cross, right? So over here, when we got the golden cross, right? When we got the golden cross right here, we went down first, but the overall trend up remained intact. So I suspect that something like that will probably happen again, where we got this rally, but it probably just ends up being a lower high, and then the overall trend down generally remains intact, right? So that is what I would guess. This one over here was pretty crazy because, what it did was it put in a low into the death cross, and then rallied up, put in a higher high, and then put in a lower low. If it were to do that over here, it would mean like, coming down here, putting in a lower low, then rallying up, and then going down, right? Like it could do something like that. Could also just sort of rally up into a lower high, and then sort of just slowly fade down to that 23K level, and then we price in recession risk sometime late this year, early next year, and then we figure out if it's a higher low, a double bottom, or a lower low. That is my best guess. Dubious speculation at its finest. I would not advise you taking any of what I said to the bank because they will not cash it in. But that is where I see the Cryptoverse right now. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We'll see you guys next time. Bye.